Hi, everybody. My name is Travis Greenwood, and I'm an admin over at the TSP Seasonal Strategies page on Facebook. I'm going to be doing a video blog, hopefully on a monthly basis. There may be a couple of videos that sink their way in between there. And the purpose is just to talk about seasonal strategies, my own strategy, where I'm at year to date, and what it looks like on the month ahead. And in addition, I'm going to be doing some smaller videos that kind of talk about some of the resources available on TSP Calc, in addition to how to use some of the calculators on the tsp.gov and what advantage you can have to kind of taking a look at that. And before we get too far into any of the discussion here on TSP, I feel it's important to make sure that the disclaimer is out there up front. It's neither myself nor Matt, who's the creator of TSP Calc, or Jaron or Larry. None of us are financial advisors. We are just regular government employees who are trying to maximize our TSP returns. And so take that with a grain of salt. And we're not here to convince anybody to do one thing or another. I'm just kind of hoping everybody has an opportunity to learn more than they did yesterday about their own 401k and their own future. So a little bit about myself. I've been with the federal government for 10 years in June, and just this year I passed the 100,000 mark in my TSP account, and I'm currently at 114,400. It's been a really good year. Year to date, I'm at 29.07% return, and with contributions, like I said, I started the year at 77,000, and I'm at 114 now. So it's been a pretty substantial jump in my own balance, which has been fantastic to see. I started doing seasonal strategies in 2017, and that's when I decided to start getting a little more serious about my own 401k. And I stumbled across a forum on the internet by the name of TSP Center. And it was there that I first crossed paths with Matt and Jaron. And Matt was starting to develop what he was calling a daily strategy. And the daily strategy was based on another member's strategy, which was a monthly strategy. That member's name was Atreus. And his name is Travis as well. And he basically looked historically at the best performing fund during a certain month and put all of his funds into that. For example, January typically is the best for the F fund. And so he would be in the F fund for the entirety of January. So he would have 12 moves a year. And if I remember correctly, his goal was to make an average of 12% is what I think he decided he needed to effectively beat the market. And he was doing very well at that. He'd been doing it for years, and it was working out for him. So Matt took that premise, and he said, well, can we do better? Can we maximize our returns? Can we minimize our risk utilizing the TSP's interfund transfer rule of 2 plus 1? And his math said that it did. He tracked seasonal trends as far back as it would go on the TSP website, which is 2004. Which is why there's no data before 2004. TSP does not release those daily information. So he took that data and he developed the first popular strategy was 7980 on TSP Calc. And it was pretty cool. So June 1st of 2017, I jumped into seasonal strategies. And from June 1st through December 31st of 2017, I ended up beating the market anywhere from 3.5% to 5%. Depending on what your split was. I mean, if you were 50-50 CS or 80-20 CG or whatever, it averaged somewhere in that 3.5% to 5% range, which is pretty fantastic. Anytime you can beat the market by more than 1%, you're doing really good. And I plan on showing that in a later video, kind of as we play with some of the calculators to kind of show what a 1% beat does to your 401k over the long term. It's pretty phenomenal. So after 2017, we were rolling into 2018, and we started the Facebook page, and we were flying pretty high. Jaron had a yacht and a Ferrari on back order, and Matt was investing in local breweries, and he was counting their money and looking at early retirement and our 30% returns. And we had a nice little rude awakening in 2018. We got our asses handed to us pretty handily through the first 9 months of the year. And it was about in July of 2018 that I made a decision to exit seasonal strategies temporarily and try some swing trading because I was tired of getting beat and it was hard to watch. And I did pretty good. I made a couple percent over the market, and things were looking great until October. And I got caught in that 10% downturn in October. And one of my own rules for swing trading was that if I ever got caught in a downturn, that swing trading would be frozen for me temporarily until the market regained back up to the level with which it dropped. And it never hit that before, of course, December came and dropped me another 10%, hitting the bottom there on Christmas Eve. So, and then so for in 2019, I moved to Jared and created 57171, and I'm going to talk a little bit more about that here in just a second. I'm going to switch over to my desktop here, and so you'll be able to see I've got TSP Calc pulled up here. Okay, so this is TSP Calc if you're not familiar with the website, and I've got it preloaded here with a couple of things. So 57171 is already loaded into the main calculator here, and then I've benchmarked the C, S, and I funds, and I've also got 79368, 7980, which was our original strategy in 2017. Oops, and 79602, which is Jaren's strategy that he's looking at here for 2020. I think I said 2019. 79368 is what I'm looking at for 2020, and 79602 is what Jaren is looking at. So on the right here, you can see this is where you can search for strats utilizing a variety of parameters, but I'm not going to cover any of that in this video. So you scroll down here, and here you can see we have 57171 and then all of our benchmarks. So you can see that 57171 is at 28.94%, and if you've been listening earlier, I was at 29.07, and that's because I did deviate to the G fund instead of the F in February, and that was in an effort to beat Jaren, which is always the goal. It's kind of our inside joke, but and it worked out, and I ended up with a 0.1% better difference than the strategy. So you can see year to date, it's beating C and S and I pretty handily across the board there. Just over 3%, 2% there, 2.5% on the C, 5.5% on the S, and about just over 10% on the I. So let's scroll down here. So this is all available in the free for free on TSP Calc. As you scroll down, you're going to see some of the premium paid features. It's $20 a year, and you get these nice trading calendars, and you also get the email and text alerts. It's a kind of a pittance for what you get and for the data that Matt has allowed us to do. This has been TSP Calc in general has been really neat because it's basically a crowdfunding source of information. These strategies are only being developed because people are playing with the calculator, and I think we're gonna roll into 100,000 strategies here before the start of the new year. It's pretty incredible to see how far this has come and how much people have been playing with it. So continue to play, continue to try to expose the seasonal trends, and we'll keep all trying to make money. So I'm gonna kind of hang out down here on the trading day comparison, and I'm gonna kind of show some things. In fact, I'm gonna go ahead here. If you take a look at 57171, so this is the strategy that we've been in for the entire. Well, I've been in for the entirety of the year. I think Jaren has now switched, and I want everybody to notice a major difference between 57171 and 79368. You see it right off the bat here in January. So 57171 was developed with an all S January, and that was on the analysis of when Jaren was creating a new strategy. He figured because we did not get a December run, a Santa Claus rally or whatever you want to call it, that January was going to be pretty good, especially after it dropped 10% in for most of December, and that paid off. You kind of scroll back up here, you can see that we had our nice little 11.64% January here, and as opposed to, and that most of that was in the first couple days. So if you click here. Click on 79368. So you can see that only being in the second half only netted you basically 4.5%. So this is another cool little feature on this. I actually didn't know this until recently. So when you benchmark stuff, you can actually click through, and it will expose that strategy's yearly data. So let's go back to 57171. But it's important to note here that January is typically not a great month for equities. If you could take a look here, despite the fact that we added an almost 12% bump to its average, it still only averages 0.85%. And if you take a look at the C fund, its average is pretty low. It's one of the worst months of the year. In fact, it's the third worst month of the year. August is not a good month, and June is also not a good. Neither is really May, but January is pretty bad. And so, typically, equities are not a great place to be in January. But Jaron kind of exposed what I kind of term a micro seasonality trend or a mini seasonality trend. And what I mean by that is I've gone back through on the equities, and it's approximately 75% of the time. When December returns less than 1% or negative, January tends to have a positive correlation. And so I think that was a pretty good catch by Jaron there, and it's something that I'm going to be watching for going forward. And if we don't have a good December, which is typically a pretty good month in the markets, over 1% average, that it's gonna change the way I view January a little bit. So that being said, let's go down and take a look. So again, let's go down to trading comparison. So there's not a ton of differences here between 57,171, 79,368, and then Jaron's 79,602. You can see they match up pretty well, of course, except for that first half of January. The astute observer will notice that 79,368 does not have any purple in it, which is the I fund. One of my parameters this year was I wanted to find a strategy that performed well with U.S. equities only. And it's not to say that the I fund hasn't been good to me this year, because it has. A couple of the swings into the I fund have been pretty successful. But for my own mental sanity, I just can't handle the magical BlackRock formula that they have for determining actual share prices at the end of the day. It drives me nuts, and it's proprietary to them, and it seems kind of shady, and I don't like it. So it was driving me nuts when I thought I was finishing the day positive, and then I'd come home and find that it was minus 0.3% or something like that, and it was really annoying, and I just would prefer to eliminate that emotional headache at the end of the day, so to speak. So that being said, in addition to that, there's one more point, is that we are getting a new compilation of iFund funds, and adding some different markets and things like that. And I'm not really sure what that's going to do to the historical trends of the iFund. My guess is it will change them. And so I was trying to find a strategy that eliminated that uncertainty, and so that, coupled with my with the fact that they drive me crazy with their formula, was a no-brainer for me to eliminate I next year. So one more thing I kind of wanted to note on here about seasonal strategies is seasonal strategies are not a magic bullet. It's really easy to get caught up in these huge average number returns. 57,171 has averaged 31% over the last 15 years. But if you look over here at 7980, you'll see here that in 2018, and this was really similar to a lot of other strategies we were following. I don't have the strategy I was following saved. I think it was like 2241 or something like that, and it finished very similar to this, about 3%, and that was difficult to watch, as we were getting beat most of the year. But most of these seasonal strategies called the October and at least part of the December huge 10% drops, and they made up all of their gains in that one 3-month window. And it's important to note that while it only returned 3% in 2018. If you compare it to the C, S, and I, it was 7.5% better than the C, 12% better than the S, and almost 16% better than the I. So while it was only 3%, you still avoided a lot of these major losses here. And at the end of the day, really that's what we're trying to do with seasonality. We're not trying to return 30% on the market. What we're trying to do is we're trying to beat buy and hold. Because if we can't beat buy and hold, there's no reason to spend all the time and stress and whatnot moving your funds around. And so really that's what, if I had to give one piece of advice to somebody starting seasonal strategies or swing trading or anything is the whole goal is to beat the equity index funds. And when I say that, I mean beat your average return of the C, S, and I. Because really at the end of the day, that's what it's about. And as I'll show in a later video, it doesn't take very much of a beat to make a pretty significant change on your 401k. So anyways, that's going to wrap it up for the first video. If you guys have any questions, feel free to send me a private message on Facebook or post them in the comments here, and I'll try to get them addressed in one of the future videos. So, all right, thanks.